Good afternoon, and thanks for joining this Monday session of CoinDesk Live as we discuss a key Bitcoin trend in the Ethereum-based decentralized finance ecosystem and really the cryptocurrency space as a whole, namely the tokenization or wrapping of Bitcoins to use on other blockchains. Now, I'm Zack Voell, and I write about Bitcoin markets and mining for CoinDesk. And this afternoon, I'm joined by Matt from Thesis, Jeff from Bloq, Loong from Ren, and Kiarash from BitGo, all here to discuss this trend of tokenizing and wrapping Bitcoin to use in other blockchains with me this afternoon. Thank you all so much for joining me. I appreciate your time.
Thanks for having us.
Thanks.
Very excited.
Should be a lot of great conversation. Over the past 8 to 12 months or so, we've seen roughly $1.5 billion worth of Bitcoin tokenized to use on Ethereum, and gradually that trend is seeping to other blockchains, which we'll jump into in a couple of minutes. But most of this growth has happened over this past summer and into the fall. I want to start with sort of a high-level question and get all of your opinions on it. Specifically, where did this trend come from? Like, why are we tokenizing Bitcoin, and why is it so popular right now? In terms of everything else that's going on in the decentralized finance growth over the past couple months. Matt, maybe we can start with you.
Yeah, sure. Well, Bitcoin's super collateral, right? So that's the narrative. I think it's the hardest money we've got in the crypto space. And so I think it makes a lot of sense both as a collateral. There's a lot of it. It's not being put to productive use. Most of it is passively held. And so people want to turn their passive assets, obviously, into something that can bear interest and let them borrow against it. But then I also think there's like a lot of Bitcoiners have missed out, or they feel like they've like missed out on this new tech. And so there's this opportunity where like folks like me who got involved in Bitcoin and then moved over and started working on Ethereum stuff can like bring our assets with us to the new, newer tech and stuff we're used to playing with.
Kiarash, you have any thoughts on this? Where did this trend come from? Why are we tokenizing so much Bitcoin?
You know, I think if you want to go back to the root of the question, really want to fundamentally ask, why are we tokenizing Bitcoin? I think it's much more so a question about why are we tokenizing than why is it Bitcoin? I agree with Matt that Bitcoin is just the natural first step. Everyone's interested in Bitcoin. We're in the crypto space. Of course, Bitcoin is the first. But going to your question, why are we tokenizing things? So as early as 2015, this was the trend. Anyone who was following Ethereum and what was then being promised to be built on Ethereum in terms of decentralized applications knew that at some point we're going to reach the question of, are these applications just good for what's on Ethereum, or can we extend this beyond into other assets? And I think the answer we've gotten from the space, from the users, from the demand over the past few months is a resounding yes. People want to use these applications on Ethereum. And the first natural step is Bitcoin. And it's a bit easier than in tokenizing than some other assets. And so far, it's been amazing.
Loong, I know Ren is also playing a key role in this tokenization trend. Do you have any other thoughts on where this trend came from, I guess where the strength of this trend came from over the past 6 to 8 months or so, why we're tokenizing so much Bitcoin now?
Yeah, I mean, I think Kiarash nailed it really. I mean, this is a story that's been going on since at least as long as I've been in the space, this desire for interoperability in general. Can we take assets and I guess capability from one chain? In the case of Bitcoin, that capability is being, the hardest crypto we have, as Matt phrased it, and being able to put that onto Ethereum and take advantage of the DeFi applications that we have there that you can't build natively on Ethereum. It's been a more general narrative around, that kind of interoperability with any chains. And obviously, Bitcoin and Ethereum are probably the two most, most active ones in that sense. And the reason why I think it's been so strong over the last few months in particular is, although this has been something that the space has been focusing on for a few years, it generally takes that long to get the technology to a point that it's mature enough that A, there is actually something to do with it on Ethereum. B, the technology is there to actually bring Bitcoin to Ethereum. And also in the last few months, we've just seen a boom of DeFi in general that has sort of increased the incentive. So, you know, if you were feeling sidelined as a Bitcoin holder a year ago, you definitely feel sidelined as a Bitcoin holder starting about 6 months ago, because those incentives just got so much more strong. The APY started going absolutely crazy. And if you were a Bitcoin holder, you were just missing out on the fun. But now that, you know, you can get Bitcoin on Ethereum in various forms, you know, that's something that people are obviously looking to do in order to get advantage of that yield.
Yeah, absolutely. And Jeff, I know you've been in the space longer than maybe any of us on this panel, and you've been following the tokenization trend for Bitcoin rather closely and been involved somewhat as well. Taking a step back and looking over the decade and more that the space has evolved, why is this trend so hot now outside of just maybe a bit of envy or sort of feeling benched or left out by Bitcoin holders, on top of sort of the red hot DeFi trend we've seen over the summer? Where's this all coming from?
Yeah, over the decade long vision is really, I think, proving what I've been saying, that Bitcoin is the root or the trunk of a sort of crypto economic tree. It's kind of back in 2010, 2011, 2012. It was the base asset that everyone traded through to get another, you know, Litecoin or another token, et cetera. And when you were done with trading, or when you mined a particular coin, you always cashed out to Bitcoin as a first step. So that was just the established pattern over many years, is it being that trunk of the crypto economic tree. But this year, you could only stack sats by you know, literally getting more money from somewhere and buying Bitcoin. And as a result, Bitcoiners, with Bitcoin dominance being what it is, I think the question that, or the answer for your question, is really about Bitcoiners have the capital, as Suchu recently observed on an excellent podcast, UCC. And that capital, thanks to two unlockers, WBTC and RenBTC, can now put that BTC to work where it's no longer completely idle. So two massive unlockers this year have completely changed the landscape and enabled people to hold BTC and do something productive at the same time. And that's really the revolution that's happening right now. The people with capital, and that's the Bitcoiners, can deploy it without having to sell their Bitcoin in a secure, permissionless way. And that's what's new, and that's what's triggered literally the entire DeFi yield farming craze. The dirty little secret is a lot of that's Bitcoin money.
So that's interesting you say that it's Bitcoin money, and I sort of want to dovetail off of that comment and something that Matt and Loong mentioned as well, because I want to sort of narrow in a little bit and discuss who exactly is tokenizing all these Bitcoins, not in terms of BitGo and Ren and TBTC and so forth, but sort of the merchants that are actually taking these tokens. Because admittedly, I haven't done any sort of very scientific polling, but just sort of my impression is you don't have a lot of hardcore Ethereum investors all of a sudden switching to Bitcoin now that they can tokenize it and use on Ethereum. And you don't have a lot of hardcore Bitcoin hodlers moving all of their coins over to the DeFi ecosystem as well. So back to you, Jeff, and then I'll get all of your opinions on eventually. Who exactly is using all of these tokenized Bitcoins?
That is the information that I have, is it is those Bitcoin hodlers. You have very loud Bitcoin maximalists on Twitter, you know, being Bitcoin maximalists. But what are they doing with their money? What are they doing with their wallets? Is they're moving some of that Bitcoin onto DeFi. And so, you know, I'm connected with most of the large OTC desks and prop trading firms and stuff like that. And the data that we get from there is it is the Bitcoin hodlers, the crypto hedge funds, et cetera. They finally have something to do with their Bitcoin and keep it at the same time. You can, you know, you can buy more Bitcoin, you can pay your house payment. You can donate to charity, all without selling a single Bitcoin. And so I think that excites Bitcoin hodlers.
So their Twitter account says one thing, but their book says something maybe a little bit different.
Exactly.
It's
Matt,
just like 2017, Zach. So, you know, all of our favorite Twitter personalities who are on the Bitcoin maxi and sometimes Monero persuasion, like privately, they will brag about the returns they made on Dragon Chain in like 2017. They will, you know, they'll share their alt portfolio if you get them to have a couple steaks and some drinks. So I do agree. But I also think, and this is something that's worried me a little bit, that a lot of the money that I've seen moving over has been from whales and not necessarily from smaller folks. So I'd love to see, you know, obviously minting and actually making going across that bridge easier. That was a big difference that we saw from WBTC before CoinList. And then we saw CoinList integrate and it started to become easier for retail. And then we saw REN make it even easier for people to get in. And so I think there's a trend there that's accelerating. And so I'm hoping to see that it will be more folks who are just like have a couple Bitcoin and not just people who own large funds.
Yeah, that makes a lot of sense. Kiarash, I know sort of just simply by the fact that BitGo processes the most volume of tokenized Bitcoin in the industry now, you see a lot of the players in this specific slice of the DeFi ecosystem and crypto ecosystem as a whole. Anything to add on who, maybe even why WBTC merchants, tokenized Bitcoin merchants in general, are using all this Bitcoin?
Right. Little bit of a disagreement with Jeff over there. I do agree that the segment that Jeff and Matt is talking about are on their way in. I do believe that the money we've seen so far to transition over has been money that has previously been liquid. This is not Bitcoin that's been sitting around for a long time. It is coming out of a lot of proprietary trading shops, and it has been money that has been recently been used to provide liquidity elsewhere in the market. It's just that recently it's coming over to provide on-chain liquidity for via yield farming. I do agree with Matt that at the moment it's a bit hard for retail, for average users to bridge over their Bitcoins. Parts of it being the infrastructure isn't there yet. The other parts being that it's actually really not that profitable to play on Ethereum with small amounts of money at the moment, given the gas cost. So there's a whole slew of reasons. But moving forward, I think a kind of segment that I'm excited to see, and this is already in the works, a lot of these guys are coming over, is the segment that it's basically crypto native companies that by nature have a lot of Bitcoin on hand in their treasuries. And I'm starting to see a lot of these companies basically transform this, wrap this Bitcoin and bring it over to Ethereum. And I'm starting to see them use it more in more utilitarian type of applications, more like MakerDAO for basically crypto-backed dollar-denominated loans. Compound, all the same, but also just liquidity providing as well. A segment that falls right in there is, for example, miners. I'm focusing personally to bridge that gap over there. Those guys have historically always needed cash for their Bitcoin. They don't like to sell their Bitcoin, and that's what, you know, MakerDAO and Compound are for.
That's really interesting, especially the trend or movement from miners. Loong, anything to add on who exactly is using all of this tokenized Bitcoin?
Yeah, we actually haven't done too much analysis on you know, where the Bitcoin is coming from in terms of the Bitcoin chain and whether it's been previously active. In terms of like just the numbers that we see, I would say it's trends more towards, I mean, definitely in terms of volume, most of that's coming from big transactions that we see in the hundreds of Bitcoins one way or another. But in terms of like the number of transactions, most of them are smaller, you know, 1, 2 Bitcoin or less. So we are seeing, you know, sort of these little retail volumes being moved around. On Ethereum, we see about like 80% of that is locked in curve. So where they can do just basically earn yield on stable coin trading back and forth. And the rest is sitting on DEXs dominantly. And so, you know, I mean, that gives, I guess, a little bit of insight into what people are actually doing with their Bitcoin when they get there. In terms of like some of the conversations that we've been having with different projects, is one thing I think people are interested in is looking for ways to, I guess, unify the way they do custody of their assets. You know, so like there's all this infrastructure to do custody of assets that are ERC20s. And if you're a project that deals with any kind of multiple assets, you're definitely managing ERC20s. And the infrastructure for that is so much easier. You know, it's so much more mature. It's much more programmatic. You can enshrine a lot of that logic into a contract in ways that you can't do with Bitcoin. And so they're interested in these ideas of saying, well, can we just take all of our Bitcoin and or any of our other assets for that matter, chuck them onto Ethereum, and then we just have one ubiquitous platform to do it all. Yeah, so I think that's kind of where we see things happening.
Interesting. In context of that, sort of a little bit of an overview of the demographic of who's using these coins, I want to dip our toes a little bit maybe into some inter-blockchain drama a bit, not too deep, but just a touch, and ask who wins from this tokenization? Because obviously, given the amount of money that's moving from sort of, you might say, real BTC into synthetic or tokenized or wrapped BTC, there's obviously advantages for the Ethereum blockchain ecosystem and obviously advantages for the Bitcoin ecosystem. And depending who you follow on Twitter, one chain is either going to die or win or vice versa. So Loong, maybe right back to you. Can you maybe give a little bit more of a balanced perspective on sort of the competitive advantages for each individual chain as this bridge continues to grow and more money flows into and even back out of sort of tokenized Bitcoin?
Sure. I mean, I think it's like a triple-edged sword. On one hand, the Ethereum ecosystem clearly doesn't need Bitcoin. It's been operating the way it's been operating for many years, successfully growing. And a lot of the volume that we see in DeFi, only a very small portion of it overall really is from tokenized Bitcoin. I think Ethereum would do just fine if it turns out tokenized Bitcoin is a terrible idea and it dies tomorrow. And in that sense, I think, you know, the Bitcoin holders have the most to gain because now they, in terms of value capture that they couldn't have before, they're getting something out of that. But they also have the most to lose, I think. At the end of the day, an asset is always going to be the most secure on its home chain, if you will, because even if the interoperability protocol is perfect, you're still taking on the risk of both chains. You're compounding instead of just one chain. So you're taking on Ethereum risk and Bitcoin risk. And then in reality, you are actually taking on risk from the interoperability protocol itself. And then I guess on top of that is the long-term plan for Bitcoin as it stands today is to drive incentives with fees of Bitcoin being used on the Bitcoin chain. And so I think the existential risk for Bitcoin is a little higher as well. If all of the Bitcoin moves onto Ethereum, that's great for Ethereum. But it's probably not great for the Bitcoin chain, which is now, you know, going to suffocate in the sense it's not going to have any fees to sustain itself in the long term. So I think, you know, Bitcoin has the has the most to gain from this compared to Ethereum, but its risks are also higher at the same time.
Sure. Matt, I saw you shaking your head at some of Loong's comments there. Can you offer your take? What are the advantages for each chain or maybe disadvantages as this trend continues to grow?
Yeah, sure. So obviously I like Ethereum enough to build on it, right? But ultimately, I've made it pretty clear that I'm a Bitcoin holder first and an Ethereum technologist second. But I've got to say, this entire idea that Ethereum is going to cannibalize the security of Bitcoin is pretty ludicrous. If you look at Lightning, people are making the same arguments. Well, if Lightning succeeds, then clearly it's taking fees away from Bitcoin. That same statement can be made about every piece of new technology that helps with scalability in this space. We haven't seen it to be true. We haven't seen that sort of issue with fee markets to be true yet. It's still early, so it could happen. But I also don't think Bitcoin, I think we've got two issues here. So one is Bitcoin clearly doesn't have the most to gain because it's already got most of the market. But I think that the space has a lot to gain. So what I'm excited about with Interop here is if we can resolve our narratives a little bit and we can align this like hard money, kind of like right-leaning crypto anarchist angle that is Bitcoin and align it with this kind of like techno optimism that many of us on Ethereum ascribe to, I actually think that crypto is going to be a lot stronger. So rather than say who's going to win Bitcoin and Ethereum, I'm like, well, who's going to lose? The Fed. The Fed is going to lose if we can make these things work together.
Kiarash, something to add there?
I more or less agree with Matt here. I think the biggest winner is the space here, you know, and Bitcoin is winning big time. You know, every time we got more interest for Bitcoin as an asset, Bitcoin is winning. And today there are more use cases for your Bitcoin. You can do more stuff with it.
Yeah, that makes perfect sense. Jeff, do you have any takes on sort of the on balance, who wins more or less from this trend here, Bitcoin or Ethereum?
It's really Bitcoin is now more flexible and more powerful and has more adapters. And so, you know, as a biased Bitcoin holder, I think it's good for me and my Bitcoin that I can now do more with it than I could last year. And in fact, with yield farming, a lot more. And so just from a very selfish, rational economic perspective, as well as a larger holistic perspective, I think it's very good for Bitcoin. I think it's good for Ethereum in that it's pushing a lot of work towards scaling. And I call it a forcing function, is as was pointed out earlier, DeFi is not great for retail users right now. It is a little bit of a whale's game. And in part, that's purely an economic function of if you have $100 and each transaction is, you know, $20, $25 fee, you just lost all your money in fees, and it's just not economically sensible. And so as a result, people are working on ZK rollups, and people are working on things like open DEX, which merge Bitcoin, Lightning, and Ethereum. And so this, what I call economic Darwinism, creates a lot of innovation and activity where I think everyone benefits. So as a, you know, a technologist loving all the innovation, I'm seeing nothing but good stuff. And as a Bitcoin holder, I'm seeing nothing but good stuff.
It's interesting you mentioned fees, Jeff, because it sort of works as a segue into sort of an even more forward-looking question I want to dive into. And that's basically how this evolves sort of 6 or 8 or 12 months down the road, or even a longer time frame in terms of other chains and other tokens and coins that could be wrapped and used on other blockchains. Do you see this sort of as a Bitcoin on Ethereum only phenomenon, or will we see Bitcoin on every blockchain possibly, or even beyond that, sort of every possible token wrapped on every possible blockchain? How does this evolve? Where are the limits? Where is this trend going?
It's the economic center of gravity is what you want to follow. And if you know, if my thesis is correct that Bitcoin is the root of that crypto economic tree, then it's far more valuable to see Bitcoin on a side chain than some other random token wrapped on that side chain. And so that's why I've been looking at, for example, RSK, which has been around for a couple years, but it's basically a Bitcoin side chain that you can put tokens on and move tokens around in a EVM compatible way. And so I think kind of the trend is a fusion of the top tokens in terms of economic center of gravity. So it's not going to be all tokens are all wrapped on all chains. It's what has the most economic value to wrap. And you know, the number one answer is always going to be Bitcoin because it's got the Bitcoin dominance factor. You'll see wrapped ETH on a couple other chains, but I think that the trend is Ethereum is kind of the thanks to ERC20 and some of the factors mentioned earlier. That's kind of a technical center of gravity, and so I think the chain is going to be Bitcoin to Ethereum to a bunch of L2s and stuff like that, and then unwinding back in the other direction.
Kiarash, I know that BitGo recently announced that you're preparing to launch wrapped ETH. and wrap Bitcoin on the Tron blockchain on top of the work you already do on the Ethereum blockchain. Any thoughts on top of what Jeff said? How does this evolve? What's going to be wrapped where, and where are the limits to all of this in terms of demand?
More or less, I'm seeing two large trends. One is all asset wanting to get wrapped on Ethereum. This is a trend I've been seeing since more or less mid 2019, and it's still ongoing. And we're still getting hit up by a lot of different assets that would like to move here. The new trend that I'm seeing that is also very exciting is all other chains wanting Bitcoin over there. And I think over the next few months or so, we're going to see both of these trends play out. So we're going to get Bitcoin on all types of different blockchains. We're going to get all types of different assets tokenized and brought over onto Ethereum. What's really exciting over there is that, sure, there are different flavors of DeFi that can be explored on these different chains. For example, we've talked about it. It's a bit hard for retail to participate on Ethereum right now. That's only one aspect. I think there are many different use cases for tokenized Bitcoin that we're kind of starting to see here and there pop up in different chains. And that's actually what I'm spending part of my time on these days, and I'm very excited about.
Very interesting. Loong, anything to add there in terms of sort of the two trends that Kiarash narrowed it down to, or maybe other trends beyond that?
Yeah, I mean, I think I agree with everything that's been said so far. I think the strongest narratives are going to be around Bitcoin on chains and ETH on chains. Certainly, we've been seeing a lot of demand similarly since around mid 2019, and obviously a lot stronger in the last few months as well, or for getting all kinds of assets onto Ethereum and ETH and Bitcoin specifically onto their own chains. But mostly we see that demand coming from the chains themselves. So you get the projects and the founders saying, hey, we want in on this sort of like interop deal. We don't see a huge amount of retail demand or sort of like actual community demand for these assets, which is sort of, I guess, telling us to where the interest of the space lies. From a technology standpoint, there's not much restricting all tokens on all chains. And so what I think we'll see is that we'll see the technology capable of doing that, but you'll see it dominantly used for Bitcoin and ETH. And you'll see most of that activity dominantly happening on ETH and its L2s. And I think these other chains have a big opportunity to catch up in ways that they couldn't previously without, before interoperability was possible. With interoperability, you have a bit more opportunity to sort of disrupt and hook into existing momentum that exists on Ethereum, but they're still going to have a big struggle ahead to sort of capture the gravity of it, as Jeff put it.
That makes sense. That makes a lot of sense. Matt, anything to add there?
For me, Bitcoin on other chains is the play. I think that I can't think of other assets that have any value outside of being fuel on their particular chains natively. So I guess if you want to trade TRX on Ethereum, have fun. But do you have enough alts already on Ethereum to trade? Like, do you really need to trade TRX on Ethereum? So I think my take is like, let's get Bitcoin everywhere. Kind of like the follow-up is, what is this going to look like? Are we going to have a whole bunch of like homogenous chains, or is this going to be this really heterogeneous makeup, like, say 10 years from now? And so the way that I see it is, store value right now has a strong narrative. I imagine it will keep having a strong narrative. What else do we need? We need quick payments with fairly fast finality. We need privacy, which may or may not be cross-cutting, right? It could be its own thing, or it could be everywhere. And then we need a place to put all of our Ponzi's. And so obviously Ethereum's got a spot. And so my question is just, where are fast payments going to happen? Is that going to be in Ethereum L2, or is that going to be another chain? And how are we going to solve privacy?
Interesting. That makes sense. Now, I want to take advantage of sort of the variety of organizations and companies we have represented on this panel with the next question, as we dive into a little bit of the decentralization aspect of these different projects and companies working on providing these tokenization and wrapping services. we see sort of as by means of analogy, a similar array in the stablecoin sector of this ecosystem, where some companies offer a bit more centralized, arguably a bit more convenient services on one side of the decentralization spectrum, and on the other side, we see projects focusing much more heavily on the decentralization and trustlessness of the process of issuing and using stablecoins and whatnot. And we see a similar sort of spectrum represented in the tokenization of Bitcoin, especially with the launch and development of new projects. I think there's 6 or 7 different projects offering these services now. And we have many of those across the spectrum represented here on this panel. Loong, I sort of want to start with you because Ren is in an interesting position where you're a bit more centralized than you want to be, but with very clear intentions to decentralize over time. Can you explain a little bit about how Ren is thinking about the decentralization of issuing tokenized Bitcoins, and then sort of the decentralization and centralization spectrum represented by the other projects offering similar tokenization services?
Yeah, sure. I mean, I guess it's there are 2 sort of existing extremes of that argument today. One is obviously WBTC, which is incredibly centralized around the BitGo custodian and leans heavily into that as its sort of like future, I guess, plan. And you know, they essentially collateralize their Bitcoin with reputation, and they do a really good job of that. And I think there is standalone demand for that. At the end of the day, there are going to be institutions that want BTC on Ethereum, and they're going to want to know and have a relationship with the people that are in charge of custodying that Bitcoin. And then on the other side, you have TBTC, which is, you know, fully decentralized today, and anyone can sort of come in and do their thing. And we are on being in that direction in the future, but we're taking a sort of a slow and measured approach to getting there. The system that we're building is relatively complex, and it's very difficult to roll out a complex system perfectly on the first day. You know, we've seen hiccups like, you know, in the space in attempting to do that. And we kind of want to avoid that, that pitfall of going straight for decentralization, having an issue and not having any recourse to fix this, or having a very difficult recourse depending on what issues are found. So we begin with, you know, the technology itself is as we hope it is going to be in 6 to 12 months. However, we've restricted who can run that technology to begin with, so that if there is an issue, it's easy to coordinate a fix. It's easy to help users recover funds. And this stands not only for bugs that RenVM might experience, for which we haven't seen any yet, not any major ones that have caused, you know, issues. Obviously, there's always fixes happening all the time with every project, but even with user error. So as people get sort of more accustomed and more familiar with the system, and they sort of learn the pitfalls and the best practices that are necessary, we've had users accidentally send funds to the wrong address, or, you know, use the system in a way that it's not meant to be used, and would have resulted in the loss of funds. But because we start with this sort of more central approach, we can help rectify those situations for those people. And I think collectively we've helped mitigate the loss of a few $100,000 worth of Bitcoin. You know, we've had users do quite silly things where, you know, they'll send Bitcoin across, and then they'll have some kind of error with gas or the amount of ETH they have, and they kind of end up stuck in this position where they accidentally delete their wallet, trying to reset their MetaMask or something because their nonces has gone screwy. And if a system is fully decentralized, there's just no recourse for them. You have to say, sorry, there go your life savings, end of story. But we're in a position where we can sort of help them, help the community understand what these best practices look like from their perspective, but also help developers in the ecosystem understand what kind of UIs and UXs should you be offering your users in order to help protect them from making these mistakes. But from a technology perspective, we don't see this changing. You know, there's not going to be major changes to our technology. We're still experimenting with the economic side of things, which is something that we are able to do because we have control of the system at this stage. And it's really important to be able to run these tests in a live environment. You can test the economics in a testnet scenario all you like, but it's just not the real world. And those tests just don't hold.
Sure. Yeah, I understand that perspective. And Matt, you're even a little bit further on towards the full decentralization end of the spectrum, maybe even fully there. And without piling on too much onto our friends at BitGo before I give Kiarash a chance to talk here, can you speak to sort of leaning in towards the even more decentralized aspect of this? And I know TBTC has sort of had a relaunch after maybe a little bit of a hiccup launching the fully decentralized design. Can you speak to that too and tell us some of the lessons you've learned as your team sort of leans in 110% into this decentralized tokenized Bitcoin effort?
Yeah. So it's very stressful to take the route that we've taken. So I'll say that up front, but I also want to give WBTC, I think, more props than we're giving them. So it's not just, BitGo is not just collateralizing WBTC with their reputation and obviously with Bitcoin deposits, but they've also got insurance. They've also got money transmission licenses, and we have legal recourse as users, which is really fantastic because it's not something that our project can offer, right? So, so right now we have, I want to say maybe 140 active stakers on TBTC who are every deposit, they're chosen to be 1/3 of the custody for that deposit. And they earn rewards from that. They hold that Bitcoin for up to 6 months, though we've seen pretty high velocity. So far people have been churning money in and out frequently. And so what's great about that is if you have money, like if you're politically unpopular, at no point is someone going to shake us down and ask us to censor a payment. You're going to have to go and find those individual signers to censor a particular payment. It's very similar to trying to censor Bitcoin. You're going to have to find the miners of that block, or you're going to have to find hash power to reorg if you want to censor something. So it's incredibly expensive. On the one hand, now obviously 140 stakers, I'd like to hit 500 by the end of the year, but I think Lop on Twitter the other day said something really great, which is like measure decentralization by the number of doors you have to kick down before you can compromise the system. So we need to be driving that number up as high as possible across different jurisdictions, geographically. So that's really important, and that's kind of our end goal. That said, like doing it that way, it's hard. It's been hard on the tech team, and it's expensive. I would say we're probably at the most disadvantage in terms of fees, period, because we verify every step using Ethereum's consensus. There's no additional chain that we're using to coordinate. There's definitely no back office where we can kind of deal with stuff. And our customer service department is a Discord where people can find signers that may or may not be related in their transaction and like just hope that they can recover their money if they make a big mistake. So in that way, it's a lot more like Bitcoin. Now, just like Bitcoin, wow, I flipped my payment and my TX fee. Oftentimes the signers will be great and they'll give you your money back. But like it's very much a, we're all adults. This is a decentralized product. You should be careful, but because of that, you can build really interesting things. So
interesting.
Yeah.
Yeah, that's really interesting. We have a couple of questions coming in here about TBTC relevant to sort of what you were just discussing. Before we touch on those really quick though, I want to get the perspective from sort of the opposite end of the spectrum with Kiarash from BitGo. And before I ask you, Kiarash, I do want to mention that sort of the decentralization ethos in this space runs very deep. No one questions that. But in terms of money flows, we see WBTC commanding over or around 75% of the money flow for tokenized Bitcoin. So clearly, if we want to just sort of pull the market really quick, a centralized custodian for this product seems to be, at least to date, the winner. Can you just talk to us a little bit about how BitGo thinks about sort of the decentralization versus custodian approach and your perspective from leaning into the custodian centralization end of the spectrum?
Absolutely, absolutely. I think it's very important to first talk about what is the nature of centralized tokenization of Bitcoin on Ethereum. And its nature fundamentally is a bit different than a centralized USD-backed stablecoin. Because both of these assets are on the blockchain, you have a level of transparency and verifiability that you don't have with other types of tokenizations. So, for example, today, any user can see every WBTC minted, how much was deposited for all of these mints, where are all these assets sitting on right now, how often are they being touched, what is being done to them, and etc. And we do regular audits as well. On top of that, thanks to something like Chainlink, you can basically have a permissionless oracle look at these wallets and broadcast the amount that is in supply. So applications can actually and live compare these two. So I think it's very important to highlight that the centralized system that we get with tokenized Bitcoin is a lot more robust than a stable coin. And this is by nature. And I would like to give some props to BitGo because we did embrace this nature. There are other flavors of centralized tokenized Bitcoin that chose to not to embrace these features. So that's one. The other is, we are all about decentralization here at BitGo. We started our multi-sigs back in 2013 and we pioneered that space. Today, 20% of all Bitcoin transactions go through our multi-sig wallets, and these are wallets where BitGo only holds one of the keys. So these are non-custodials. And we have a very similar goal with WBTC as well. We can, in time, basically disintegrate the multi-sig that holds the Bitcoin across different jurisdictions, across different legal jurisdictions, geographical jurisdictions, and across different companies. And then on the other hand, there are some advantages that you get from a centralized system that Matt actually touched on. One of them being procedural oversight via SOC 2. So we're responsible to have processes. How do you hold the keys? What happens if you lost them? And then we have someone else come in and make sure that we actually follow the processes that we set up for ourselves. We are a regulated trust company out of South Dakota Division of Banking. So there is regulatory oversight on the company. What is this company? What are we about? What are we doing? There are people that come in and check on these things. And lastly, we have the most comprehensive insurance offering in the whole system. So, things always do go wrong. And in such situations, you want to have assurance for the user. So I think the system as a whole is a bit more robust when you're tokenizing cryptographically created assets. And on the other hand, you do get some advantages from a centralized system beyond just the efficiency.
Sure. Jeff, can you sort of weigh this for us, stepping back and looking at the spectrum of projects we have along the centralization and decentralization ends, sort of weigh the two options for us?
Sure. Well, I'd first start by saying it's not an either or, it's more of a range. And what Bloq has been building for the past several months, and we're about to release in a couple weeks, Vesper Finance, is a bit like vaults. We call them holding pools. And one of our first was a BTC holding pool. And we chose initially to build off of WBTC because of many of the the high quality centralization aspects, but it's really again a range, and our own products aim to be permissionless, fully non-custodial, etc. And so organizationally, we have a path to how do we get to that TBTC ideal. And so to us, it's not an either or. It's a we chose to start with WBTC, and we actually are giving a bear hug to every single panelist here. We're adding REN, and then later on we're adding TBTC because it hits our end goal of decentralization. And so it's about to us real money testing, time and market, maturity, both of code and of team. How much the other players trusted in the market. All of those factor into the kind of decentralization. It's more than just who controls the multi-sig.
Sure. Great perspective. Matt, back to you really quick. We had a question come in about collateralization requirements on TBTC that I thought was interesting and wanted to give you a chance to speak to really quick. The question is simply, does TBTC really unlock BTC to be used in DeFi with your 150% collateralization requirements? The questioner asks, isn't it the net impact basically just over leveraged ETH? Can you speak to that a little bit, the TBTC collateralization requirements?
Yeah, well, just to be clear, that's not really how leverage works. So I just, questioner, just to be clear. So this has nothing to do with leverage. But the way that TBTC works is in addition to accepting a Bitcoin deposit, the people who are holding your deposit put down 150% of the Bitcoin's value in Ether, which is clearly like much less capital efficient than more centralized solutions. So the benefit of that is that if, let's say if your custodians, I don't know, there's like a huge AWS outage, or like the feds have appeared or something, I don't know, something really crazy happens, you always know that there's ETH back in that deposit. So if someone refuses to send you your Bitcoin and physically settle, you can take their collateral, their additional bond. So I think that's pretty extraordinary. It's kind of a lot, right? Like I'm not used to like, oh, a system gave me downtime and so now they're going to have to pay me out of their own pocket. The flip side though, again, is this capital efficiency. So I personally think whether you think the value comes from the Bitcoin or comes from the Ether is totally irrelevant. The reason that I'm doing this is so that people can be confident that they can lock Bitcoin, convince other people that it's Bitcoin, use that Bitcoin, and then reliably physically settle and unlock that Bitcoin. And whether or not we think that the value like comes from the Ether or not is it's sort of irrelevant.
Got it. Got it. Yeah, I mean, I guess I'd have to agree with that. That makes a lot of sense. Loong, I want to toss it back to you really quick, just to sort of wrap up this decentralization question, because we sort of heard from you speaking to Ren as you sort of move through this process with an end goal that you're building towards. We heard from Matt, who sort of maybe already there at the goal you're aiming for, and then Kiarash with BitGo's sort of goal in a little bit of the opposite direction. But you're again in the unique position where you have hands in both pies, so to speak. And I'm interested to hear sort of from a logistics perspective, how you sort of juggle those two responsibilities, the sort of the migration from a centralized flavor to a significantly more decentralized flavor down the road, and what that transition looks like.
Yeah, sure. Just before I touch on that, I think something got mentioned before about the more doors you have to knock on, the better. So one thing that's worth mentioning straight off the bat is I think it's great that we have so many Bitcoin on Ethereum options, just like we have so many stable coins, because for me, decentralization is always about choice, right? I mean, you can choose to trust a custodian if you want. A lot of people do because it's super convenient. Like, I mean, it's kind of annoying if you were to be your own bank all of the time if that's not what you wanted to do. But for the first time in the decentralized space, you can do that if you want. And so the argument of decentralization giving you choice is not really much of an argument if there's only one flavor of Bitcoin on Ethereum. So the fact that we have lots and they all have different models, they all fail under different modes, they all have different ways of recoursing from failure is good, because then people can pick the one that they want. And it's unlikely that a failure that happens to one is something that will happen to all of them simultaneously. But yeah, I guess directly hitting your question, it is complicated. So obviously the first step that we take here is that we don't make a separation between, I guess, the technology that we want to see at the end date and the technology that we run internally. So we don't have some like special system that's just us that is somehow different. The technology that's being run today on all of I think we have something like 1,300 nodes now, is the same technology that we run. The difference is that there's just a little flag saying for these particular features, ignore the 1,300 nodes and just pay attention to our specific nodes at this moment. So the plan for us is to slowly modify that flag. And so the first step is to modify that flag and say, well, listen to everyone with regards to consensus. And then the second flag is to say, well, listen to everyone with regards to execution as well, which is sort of the key management side of things. And that in itself happens in multiple phases. So instead of just saying, you know, we go straight from being the only ones responsible for consensus to being having everyone responsible for that. There's sort of this intermediary period where we take a set of projects and investors that are well incentivized to behave in the sense that they either use RenBTC directly. So as I said, 80% of RenBTC is currently sitting on Curve, and Curve is going to be part of that sort of that next membership. You've got investors like Polychain and Infinite Capital who are invested obviously in Ren, but also invested in other projects that use RenBTC. So there's sort of that second step that we sort of use as an intermediary, and we bounce through that into the larger sort of totally open protocol. And we imagine that that process will take some time, because we want to give each stage the appropriate amount of time to sit and sort of wait and see that everything is really okay. And I think there are some sort of conditions that you can only test over time. A great example is, I think yesterday or the day before, the South American data center in AWS went offline and disconnected from the public internet. And we actually had a node in South America that sort of stopped being accessible to the rest of the network. And the system continued to function as expected, as normal. But these kind of failures, you can't simulate AWS data centers going offline. I mean, you can try, but you just got to wait for it to happen and see, did the system respond the way that we hoped it would and the way that it did in simulations?
Sure. That makes sense. I'm curious though, do you think, and Matt, I want to ask you the same question in just a second, in terms of sort of growing the number of doors that one would have to knock on, in terms of the number of projects offering a tokenization or wrapping service, do you expect sort of the number to continue to grow, similar to a trend we've seen in stablecoins, I guess in late 2018 and through 2019, where there seemed to be a new stablecoin announced every month or something like that? Or do you think we sort of have an established set of tokenization projects that will continue to mature and develop and even compete with each other over the next several years or so?
Yeah, that's a great question. It's not clear to me that us on this call are the winners at all, or that all of the final like pegged BTC implementations or other pegged asset implementations are on this call, right? So, but that said, I would still expect, similar to stablecoins, that you have a dynamic where something like USDT appears, something like USDC appears, and something like DAI appears. And so I think the question that I've got is, like, really, frankly, is WBTC USDC or USDT? And my bet is it's USDC, and I'm gunning right for that USDT, where I think that you'll have something that's really great for Western investors, and that's reliable and that banks are comfortable with. And then you'll have something that everyone uses everywhere else. And that maybe you're like, what's going on? I don't know if I always like my counterparties here, but it works. So I think that's the dynamic. And then the other thing we'll see is, like, instead, maybe there'll just be a DAI and everything will be centralized. So we'll
interesting. Loong, can you add to that a bit? What do you think? Do we have the full set here, or will it continue to grow?
No, I mean, I definitely don't think we have the full set here. We don't even have the full set here as of BTC on Ethereum projects today. There are so many other flavors as well. I mean, there's also non-tokenized Bitcoin on Ethereum, for example, synthetic BTC. But I think one trend that we are already seeing is that we'll see Bitcoin on X projects spin up that are dedicated to that try to capture market share by focusing on other chains. So we're already seeing that with chains like Polkadot, where you're seeing these sort of Bitcoin on Polkadot projects launching. I think in the last few days, there were 2 Bitcoin on Ethereum projects announced, one which was a one-way bridge, which I don't really understand, and another which was some other sort of two-way bridge. So I think there'll be lots of different projects trying to capitalize on the explosion of Bitcoin on other chains. Whether they survive in the long term, I don't know. I think we'll certainly see multiple instances or implementations of Bitcoin on X surviving in the long term. I don't think there'll be as many as we'll see explode. I think we'll see like a huge explosion of all these different variants of that project, and then ultimately we'll slim down to just a few that we really care about.
Got it. Kiarash, obviously everyone's coming for WBTC as you're sort of the market leader now. Do you expect more projects to come onto the market to sort of try and eat your market share, or do you think we have the full set here?
I don't really expect a lot of centralized solutions to come around. I think the current one we have with WBTC is really robust, and that part of the equation, I don't really see much. Over here, we're incredibly excited about what Matt and Loong are doing. And they're right, there will be other people with new models trying that. So maybe I won't really speculate here as much, but one thing I do want to mention is that each one of these flavors of tokenized Bitcoin has a strength and has a weakness. What I'm really interested to see is how does Ethereum's money Legos, this composability system, how does it work for the end user in a few years from now? Will they actually know what flavors of tokenized Bitcoin are they using, or will they just hop around bridges? And maybe, I don't know, maybe we should pass that back to Loong, because he worked on WBTC.network and sorry, WBTC.cafe. And I think that's a very exciting project where it's a little bit REN, it's a little bit WBTC, it's a little bit Curve. And I think in a few years, it'll be a lot like that for the end user.
Loong, do you agree with that, or what are your thoughts?
Yeah, I mean, I think one of the primary use cases for RenBTC when we first launched was getting access to WBTC, because WBTC is integrated everywhere. I think I kind of agree with Kiarash, or what he was sort of hinting at there, which is that different flavors of Bitcoin will have different strengths and weaknesses. And as a part of that, they'll be integrated into different systems in different ways. And people will bounce around between the different versions of that using maybe something like Curve to sort of go one-to-one in order to access the particular feature that's very strong. So, it could be the case that RenBTC is just there for high, usability in terms of being, having a super smooth user experience. But at the end of the day, people want to hold their assets long-term as WBTC, or, they want access to TBTC because it might be more liquid on this DEX, and they want to capture an ARB opportunity, or they might want WBTC to open a vault on MakerDAO or whatever it is. And I think people will be flying between these different variants of BTC as a part of that. I already do this today with stablecoins to a degree, and I know a lot of people that do, and it creates a huge market for products like Curve that do one-to-one stablecoins. And I think we'll see the same thing for Bitcoin, and we'll also start seeing these are like meta coins, which is one BTC backed by many variants of it, so that you can sort of diversify the risk. Sure, that makes sense. We're sort of coming up on time here, and I can't thank you all enough for your time and opinions and thoughts on everything we've discussed. Definitely been educational for me, and I know our viewers have enjoyed it as well. I sort of want to put a cap on our conversation with a bit of a prediction, and I hope you all will share your thoughts on this. But if we look 1 or 2 years down the road, what sort of volume or quantity do you expect for sort of the amount of Bitcoins that we'll see tokenized across the entire array of Bitcoin projects? I mean, now, as I mentioned when we first started talking, we're at roughly 1.5 billion, I think north of 140,000 or 130,000 Bitcoins. So fast forward 2 years, how big will this tokenized Bitcoin slice of the industry have ballooned to?
10% of the Bitcoin market cap, calling it.
10% of Bitcoin market cap. Wow, that's large. Kiarash, any thoughts? How big?
I was going to say 5. But Matt's optimism gets me excited.
Jeff, what do you think?
I'm even beyond Matt. I think that Ethereum gives Bitcoin the programmability that it lacks. And so it's kind of a, to use a bad business analogy, 1 + 1 = 3. So there's a lot of demand, but at the end of the day, people want to hold Bitcoin. And so it'll always be a connector.
Loong, how much Bitcoin do you think will end up in all these tokenized Bitcoin solutions?
Maybe I'll strike an average then. I'll say 7.5%, play it safe. I do think that total value locked might stop being a measure that we look at, and we might look at actually volume and how much is moving between chains, and how much is happening there. Interesting. Well, thank you all so much again. This has been a great session. CoinDesk Live discussing the wrapped Bitcoin trend, or tokenized Bitcoin trend, I should say, beyond just wrapped Bitcoin, as more and more Bitcoins move over to the Ethereum and decentralized finance ecosystem in general. On behalf of CoinDesk, thank you all again, and good day.
Thanks, guys.
Thanks all.
Thanks for having me.
Thank you very much.